Hey guys, welcome back to WX Capital. Today I want to talk to you guys about a fundamental shift in how people are investing. Pre-COVID-19, the majority of investors were value investors, or people who would look for undervalued stocks that had high upside potential. However, now we're getting into this wave of astronomical valuations for companies that don't expect revenue or products to be created until 2023 or 2024. Investors are now looking towards TAM, total addressable market, to help them understand whether it's a good long-term investment or not. So in this video, I'm going to explain and prepare you guys for this fundamental shift in investing so you don't get left behind. So let's break down all the factors that led to TAM investing being a thing. The first factor was near zero interest rates. When the Feds decided to have interest rates near zero, they basically wanted to stimulate the economy. Basically, no one wanted to hold cash. They wanted to put their cash into something that appreciated. One easy way to make sure that your cash doesn't just sit there is investing it in the stock market. And with Robinhood, it's as easy as just clicking a few buttons on your phone. Now I want to talk about our second factor. So with low interest rates, individual or retail investors began trading on Robinhood more prevalently. Retail investors were about 10% of market activity in 2019, and now they make up over 25% of market activity. Now, this is both good and bad. The good part about this is that individuals are taking agency of their financial future. However, the drawback is that a lot of individual investors will just end up putting money in brands they're familiar with, and that'll end up being big tech brands, which have seen a lot of growth over the past decade. So we saw a rise in Google valuation, Apple, Tesla, and other big tech companies. Ultimately, this resulted in the NASDAQ hitting all-time highs in a time when our economy is pretty near lows. Now let's boil it down to the third point, which is TAM investing, or as I mentioned before, total addressable market investing. So the difference between TAM investing and value investing is that when you're thinking about the total addressable market opportunity, you're thinking big picture. It's not necessarily how much revenue the company is going to bring in next year or the year after, but rather how much market share or how big is that market the company is trying to address. So let's take Tesla as an example. This is a great example. Tesla has only sold about 300 to 400,000 cars in 2019. So this is way behind any other car manufacturer in the world. However, what investors are focused on is not necessarily how many cars they sold, but rather the fact that electric vehicles are probably going to be the future, and the fact that Tesla is by far the leader in EV. So as individual investors are focused on the TAM, they're putting all their money into stocks like Tesla and other things that are going to change the future. What's fueling this is that institutional investors who primarily looked for value-based plays are feeling like they're missing out. So now institutional investors are seeing these skyrocketing stock prices and valuations, and they're realizing that their older forms of investing tactics no longer are relevant to what's happening in the market now. So they've left value investing to the side, and they've begun looking at what companies are the leaders in industries that have big TAMs, or total addressable markets. So let's bring it all back now. The question is there a fundamental shift in investing? Are we moving away from traditional Warren Buffett style investing or value investing and now looking towards the future and looking at total addressable markets and companies that are going to change the world? I believe that as we develop technology, progress is going to advance faster. What this means is that people expect technology and companies to grow at a faster pace. So as we see companies starting to disrupt industries such as Facebook, Amazon, Apple, or Google, they're going to become titans in their field. There's not going to be much competition, And there's almost as if these companies have monopolies. So what investors are looking for now are the next Google or Apple or Facebook. Tesla is a great example of this as they dominate the electric vehicles market. When anyone asks you, what electric vehicle are you going to purchase? The first thing that comes to mind is Tesla. So as we got hit by COVID and more retail investors are in the market, there are fewer people doing models. There are fewer people that are doing in-depth analysis. And what they're just focused on are who's leading in the industries and which industries are going to be disrupted. When you put those two together, you're going to find some really interesting companies that have a lot of upside that may not be earning a lot near term in terms of revenue or gross profits, but have so much upside that investors are confident in putting their money with those companies. So that's all I have to talk about today in terms of this fundamental shift in investing from value investing to TAM investing. If you guys have any questions, please leave them below. Let me know, do you think that there is a shift in how people are investing? Will TAM investing be the new form of investing? Leave your thoughts below, and I'll see you guys next time. If you guys liked our video, don't forget to like, comment, and subscribe. Also, check out our website at www.wx.capital. We have a great subscription service that allows you to get real-time trades as well as market commentary, so you know exactly what's going on with stocks and you know exactly what we're trading and what the next hot stock pick is. See you guys around.